Welcome back to Investing Talk Podcast. We're diving into a fascinating company today, Tantech Holdings,
Oh, interesting.
ticker symbol,
Okay.
TANH. Now, what's really interesting here is they're working in two pretty different areas, bamboo-based charcoal products
hmm
and electric vehicles,
Okay, wow, that's a mix.
right? And they're doing all of this with a pretty small market cap, just a bit over $1.3 million
Yeah.
as of January 23rd, 2025.
Interesting.
So for all of you out there looking for investment opportunities
Sure.
and wanting to hear different perspectives, let's get into what's going on with TNH.
Yeah, you really hit the nail on the head there. This company is a bit of a puzzle. You've got this traditional image of bamboo charcoal, often connected with sustainability and natural products. And then you jump to electric vehicles, which are all about cutting-edge technology and the future of transportation. Makes you wonder how well Tantech can actually manage these two totally different segments.
Exactly. It's definitely not your typical business model. And since we're talking about things that aren't typical, let's talk about their stock performance. The 52-week range is wild, to say the least, from a low of 12 cents to a high of almost $1.60.
Wow.
It's been a roller coaster.
Right.
But I am seeing a bit of a downward trend lately.
Yeah, you're right. On January 23rd, the stock hit a low of 15 cents and a high of 16 cents.
Okay.
And it's been hovering around that 16-cent mark. But when you look at the bigger picture,
Right.
TNH's stock is down over 81% compared to the broader market. That's a big red flag for some investors, especially those who don't like a lot of risk.
That's a huge drop. It does sound like they're facing some challenges. But wait a minute, their earnings per share actually went up in their last report on January 6, 2025. Even though their revenue went down, they reported earnings per share of 97 cents. How does that make sense?
That's where things get interesting. A drop in revenue with an increase in earnings per share usually means they've gotten better at running things or they've gotten their costs under control. It could be a sign that they're becoming a leaner, more profitable company.
Right.
But, and this is key for anyone thinking about investing, we have to think about why their earnings per share still missed what was expected.
Okay, so some mixed signals so far. But they have had some good news recently, haven't they? Didn't their subsidiary Go Homeway Group get a pretty big sales contract?
They did. In December 2024, Go Homeway Group signed a $5 million sales contract with Heidi Enterprise Group.
Wow.
We're talking monthly orders between $400,000 and $500,000 for their flooring products.
That's great.
And on top of that, they successfully registered the Go Homeway trademark in the U.S. on January 16th, 2025.
So they are making some moves, especially in the U.S. market. Does that mean they're getting ready for even bigger things, maybe even a global presence?
It's definitely possible. The trademark registration in particular seems to fit with their plan to develop a franchise system in North America. It shows a certain level of ambition
Right.
and could be a good sign for future growth. However, we can't ignore that they got a Nasdaq extension until February 24th, 2025 to meet the minimum price requirement for their stock.
Go.
They need their share price above $1 for at least 10 business days in a row to stay listed. It's a tight deadline, and not meeting it could have serious consequences.
It definitely adds some uncertainty to the situation. It sounds like a lot depends on them getting their stock price up. So what's the technical analysis telling us? Are there any signs that might give us a hint about what the price might do?
Let's look at some of the technical indicators for TANXs. If we start with the 20-day simple moving average, we actually see it's pointing up.
Oh, interesting.
This might suggest some short-term gains are possible, but don't get too excited just yet.
Right.
We need to see the bigger picture. The longer-term moving averages, like the 50-day and the 200-day, are still trending down. This means there's a lot of bearish pressure on the stock.
So mixed signals from the moving averages. What about other indicators like the RSI and the Mass ED? Can they give us any more clues?
That's a good question. The Relative Strength Index, or RSI, is currently at about 46, which puts it in neutral territory. It's not saying buy, but it's not a strong sell signal either. And as for the Mass ED,
What was that again?
the moving average divergence indicator,
Okay.
it's a little bit negative right now, which usually suggests bearish momentum.
Okay.
However, and this is important to note, it's very close to turning positive.
So not exactly a huge vote of confidence from the technical indicators?
Yeah.
It seems like the overall feeling is one of caution.
Yes, I think that's a fair assessment. Right now, I'd recommend investors hold on to what they have and wait for things to become clearer.
Okay.
Things are too unpredictable right now to make any big predictions.
That makes sense.
Yeah.
So we've got this company, Tantech Holdings, with its unusual combination of businesses, some positive things happening, some big challenges. For someone thinking about investing in TANH, What does it all come down to?
I think the best way to look at it is that TANH is at a crossroads.
Okay.
They've got these hurdles to overcome, no question about that.
Mm-hmm.
But there are also some signs of hope.
Dope.
They've shown they can be more efficient in how they operate. They're making moves to expand, and there's always a chance the market could rebound and that could lift their stock price.
So it's a high risk, high reward type of situation.
Exactly.
Hmm.
Investing in TANH at this point is betting on their ability to follow through with their plans and take advantage of any potential rise in the market.
Okay.
It's not for the risk averse.
Right. So we've laid out the facts, the risks, and the possible rewards. Now it's up to our listeners to decide if Tantech Holdings fits with their investment strategy and how much risk they're willing to take. And before we go deeper into their financials, I want to remind our listeners to subscribe to Investing Talk Podcast. Share this episode with anyone who might find it useful, and leave us a comment with your thoughts on TANH. We'd love to hear from you.
Yes, definitely. We always appreciate your insights and perspectives. Yeah, it really is a fascinating case, isn't it? Tantech Holdings with their bamboo charcoal products and then jumping into electric vehicles. You don't see that every day.
I know, right? It's like they're going for both the eco-friendly consumer and the tech person. But honestly, their stock hasn't exactly been great.
Yeah.
At over 81% compared to the broader market.
Yeah.
That's a tough one for any investor.
It definitely raises some red flags. And that Nasdaq Q deadline coming up just adds more pressure. If Tantech can't get their share price above $1 by February 24th, they could be delisted. And that would be a major setback. It could make investors really nervous.
Absolutely. Getting kicked off Nasdaq Q wouldn't exactly make people feel confident in the company. But let's not forget about the good news we talked about. That $5 million sales contract with Heidi Enterprise Group for their flooring.
Right?
It's a good sign, right?
It is. And it shows they're making progress in the U.S. market, which has a lot of potential for growth. That Go Home Way trademark they got also suggests they're serious about building a presence in North America.
Okay, so maybe there's some hope there.
Yeah.
But let's go back to those technical indicators. We talked about the moving averages, RSI and MACD earlier.
Right.
And it seemed like a mixed bag. Are there any other technical things investors should be thinking about?
Well, there is one more thing I think is worth mentioning. Some analysts think that just based on the technicals, TANH is oversold right now. This means the stock price might have dropped more than it should have based on how the company's actually doing.
Oh, so there's a chance the stock could go back up, even if the company's finances haven't really changed?
That's possible, but it's really important to remember that technical analysis is just one piece of the puzzle. It's not a crystal ball.
Right.
It can give you some insights, but it's not a guarantee of what's going to happen with the price. Investors should always look at a bunch of different things before making a decision.
I agree. A holistic view is important. Speaking of which, we haven't really talked much about TANH's two different businesses, bamboo charcoal products and electric vehicles.
Right.
Let's break those down a bit.
Sure.
What are some of the key things to think about for each one?
Okay, let's start with bamboo charcoal. This segment is tapping into the growing interest in sustainable and eco-friendly products. People are more and more aware of their impact on the environment.
Right.
And they're looking for products that match their values.
So there's a market there for TANH to tap into. But what about the challenges? Are there any obstacles they need to overcome in this space?
Of course. The market for consumer products is really competitive. TANH is up against both big companies and smaller brands. They'll need to stand out through things like product quality, brand storytelling, and good marketing if they want to get a good share of the market.
That makes sense. Now let's talk about their electric vehicle segment. This is a market that's growing quickly with governments all over the world encouraging electric vehicles to help with climate change.
Exactly. And that creates a huge opportunity for TANH. But they're entering a crowded market.
Yeah.
That's dominated by big car companies and a bunch of new startups. It's an industry that needs a lot of money.
Right.
And TANH will need to invest strategically in research, development, manufacturing, and marketing if they want to be competitive.
So they've got a lot of work ahead of them in both areas.
Yeah.
They have to figure out the consumer products market while also trying to find a place for themselves in the electric vehicle world.
Yeah, precisely. It's a tough balancing act.
Yeah.
And that's why it's really important for investors to understand their management team and their strategy. Do they have the experience and the resources to make their plans happen?
That's a really good point. Investors should definitely look into the company's leadership and their history. Now let's go back to TANH's financials for a second. Their last earnings report showed their revenue went down, but their earnings per share went up. Can you explain what that means?
Sure, the drop in revenue probably means they're facing some difficulties.
Right.
Likely because of things we've already talked about, competition, supply chain problems, and the overall state of the market. But the fact that earnings per share went up suggests they've been making changes to improve how efficiently they operate or to control costs.
Okay, so maybe they're cutting back and finding ways to be more profitable even though their revenue is down.
Exactly. They're doing more with less, which could be a good sign for future growth. But we also need to consider that they didn't meet earnings estimates. Why didn't they reach those expectations?
That's a good point. And it's something investors should look into. It could be because of things they didn't anticipate, or it could mean there are some bigger problems that need fixing.
Absolutely. And that's where looking closely at the company's financial reports and reading what they say on their earnings calls can be really helpful.
I agree. So we've talked about a lot today. TANH's unusual business model, the risks and opportunities they have, their financials, and the overall market.
Hmm.
What's your overall take on TANH as an investment?
I think it's safe to say that TAN is high risk, but also high reward.
Okay.
They have the potential to change two major industries.
Right.
But they also have some big challenges ahead of them. Whether they succeed or not will depend on their ability to make their plans work, navigate a market that's always changing, and convince investors that their vision is a good one.
So it's a gamble, but maybe a worthwhile one for those who believe in the company's long-term future. But before we wrap up, I want to remind everyone to subscribe to Investing Talk podcast for more in-depth analysis of the stock market and investment ideas. And don't forget to share this episode with anyone who might be interested in TANH and leave a comment. We always like to hear your thoughts. Now let's move on to some final thoughts and key takeaways. Okay, so we've really dug into Tantech Holdings. We've seen their unusual business model, those crazy stock swings, and that Nasdaq Q deadline they're facing. It's a lot to take in, but for those of you who are still interested in TANH, what are some of the key things to remember?
I'd say the most important thing is that Tantech is at a turning point. Their future really depends on a few things, like can they stabilize their revenue, can they really get into the U.S. market, and of course, can they meet that Nasdaq Q requirement for their share price? It's a risky situation, no doubt.
It is. It's definitely high risk, high reward.
Right.
But let's imagine for a second that they actually pull it off.
Yeah.
Let's say they meet that Nasdaq Q deadline, their revenue starts going up, and they make a real place for themselves in the U.S. market. What kind of impact could that have?
If Tantech can handle all those challenges, it could really change things. Meeting the Nasdaq Q requirement would show that they're stable, and that might attract more investors. Having revenue that consistently grows would prove that their business model works. And becoming a strong player in the U.S. market would give them so many chances to grow.
So in that case, we might see their stock price go way up, right?
It's definitely possible. Their stock price is pretty low now, partly because people aren't sure what's going to happen to them. If they can turn things around and do what they say they're going to do, investors could get a lot more confident, and that could mean their value goes up a lot.
That sounds good for people who are willing to take the risk. But like you've been saying throughout this episode, people need to do their research.
Yeah, definitely.
Don't just jump in because of hype or what you hear.
Exactly. Really research the company, look at their financials, understand who's running the show, and think about their growth strategy. Investing in any company, especially one like Tantech, means being realistic and understanding that there are both rewards and risks.
Well said. And for those who are new to investing or just want to know more, where would you suggest they go for information?
There's tons of great information online and in libraries. Trustworthy financial news websites, SEC filings, and the investor relations parts of company websites are great places to start. It's also good to read books and articles by financial analysts and experts who know their stuff. Remember, knowledge is power when it comes to investing.
Absolutely. The more you know, the better choices you'll make for your money. Well, we've come to the end of our look at Tantech Holdings. We hope this has been helpful and informative for you.
It's always great to talk about these interesting investment opportunities with you.
And to all our listeners, thanks for joining us on Investing Talk Podcast. Don't forget to subscribe, share this episode with anyone who might be interested in TANH, and leave us a comment. We'd love to hear your thoughts. Until next time, happy investing.